Hello, namaste and welcome you all. From today we are going to start new series of lectures on marginal costing technique. Before starting discussion on marginal costing technique, we need to understand some basic concepts of marginal costing technique. Basic concepts like what is meant by fixed cost, what is meant by variable cost, what is meant by BP, what is meant by margin of safety, what is meant by PV ratio, and many more. So one of the basic concept of marginal costing technique is fixed cost. So today in this lecture we are going to understand what is meant by fixed cost and how it changes or how it behaves with the change in the volume of production or sales. So let's start. Fixed cost is also known as rigid cost, constant cost, or non-variable cost. Fixed cost, rigid cost, constant cost, and non-variable cost are one and same. So fixed cost, as the name indicates, fixed cost means which remains fixed. In other words, which remains which doesn't change, that is fixed cost. The cost which doesn't change, that is fixed cost. That's why this cost is known as fixed cost. So what are the examples of fixed cost? Examples of fixed cost: rent, insurance, salaries, depreciation. Rent, whether you manufacture or not, you have to pay the rent. Suppose you have taken plant on rental basis, whether you manufacture 0 units or highest up to the capacity, you will have to pay same rent amount. Rent amount will not increase or decrease if you increase the production or decrease the production. Suppose your plant capacity is 100 units per annum and you have taken plant on rental basis and you have not manufactured a single unit also, even though you will have to pay the rent. If you have manufactured 1 unit, even though then also you have to pay same rent, that is 100. Suppose you have manufactured 10 units, 20 units, 50 units or 100 units up to your plant capacity, your rent amount will not increase if you have increased the production. If your rent amount production is decreased, even though rent will not decrease, it will remain same. Suppose rent per annum is rupees 100, then whether you manufacture or not, rent amount to be payable will be same, that is rupees 100. That's why these such costs are known as fixed cost. It has not changed. Fixed cost which doesn't change. So total fixed cost remains same. Same things happen in case of insurance also. Insurance premium amount is predetermined and fixed. It doesn't increases or decreases if you increase in the production or decrease in the production. Insurance premium amount will not change. It will not increase or decrease. That's why insurance is also fixed cost which remains fixed. Whether you increase the production or decrease the production, or your production is 0 or your production is up to the maximum level, the fixed cost will remain same, like rent, insurance. Next, salary also. Suppose accountant's salary, whether if your company has manufactured 0 units, company cannot say that we have not manufactured any unit, so in this month we will not pay you salary. It is not in that way. So salary amount is also fixed, predetermined. Suppose salary of accountant is 10,000 per month and you have manufactured 0 units, even though that salary need to be paid. Then suppose you have manufactured 10 units, 20 units, 100 units, salary will not increase. It will remain same. That is the cost which doesn't change, which remains same, which remain fixed. Such cost known as fixed cost. The same things happen in case of depreciation. Depreciation amount is fixed. it doesn't change whether you manufacture or not, or whether you increase the production or decrease the production. Your depreciation amount will not change, it will not decrease or increase if you increase or decrease in the production. Means depreciation is also cost which remain fixed, which doesn't change. In short, fixed cost means the cost which remains fixed, which doesn't change with the change in the volume of production. If your production volume increases, it remains fixed. If your production volume decreases even though fixed costs remain fixed, remains same. That's why such costs are known as fixed costs. What we discussed? We have discussed fixed costs, which is also known as rigid cost, constant cost, or non-variable means non-changeable cost, which remain fixed. We have also discussed the examples of fixed costs: rent, insurance, salaries, depreciation, and many more examples we have discussed. And we have discussed its nature also. Total fixed costs remain same. But what about per unit fixed costs? We have discussed total fixed costs remain same. Suppose you have taken one plant on rental basis and per annum rent amount is suppose rupees 100. Then rent will be same, 100 rupees you will have to pay whether you manufacture or not, or whether you manufacture minimum or maximum or average. Your rent amount will remain same, that is 100. But what about per unit fixed cost? How it behaves? How it changes as per the changes in the volume of production? Total fixed cost doesn't change, it remains fixed as we have discussed. But what about per unit fixed cost? Now with the help of one practical example, we are going to understand how per unit fixed cost and how total fixed cost behaves. So let's start our example. Suppose our plant capacity is 100 units per annum. Means yearly we can manufacture 100 units. And total fixed cost is also suppose rupees 100. I have taken small figures so as to you can understand easily. So suppose plant capacity 100 units. Total fixed cost including rent, insurance, salaries, depreciation, or suppose rent only. That total fixed cost of company is rupees 100 per annum. Suppose small figures we have taken so as to you can easily understand. So plant capacity 100 units, total fixed cost rupees 100. Now we are going to understand how total fixed cost and how per unit fixed cost behaves with the changes in the volume of production. With the help of this table, now we are going to understand how per unit fixed cost behaves with the changes in the volume of production and how total fixed cost behaves with the change in the volume of production. So let's start. The first column denotes production, number of units. It is given in number. Second column denotes per unit fixed cost, PUFC, per unit fixed cost. How it is to be calculated? Very simple. Per unit, total fixed cost divided by number of units. Then we can get per unit fixed cost. That is given in rupees. Then third column is of total fixed cost, TFC, total fixed cost. It is also in Indian rupees. Now we are going to understand how it behaves. Nature we are going to discuss. Now plant capacity is 100 units. Number of units production, how many units we have manufacture. And total fixed cost is rupees 100. Total fixed cost 100. As we have discussed, total fixed cost doesn't change whether you increase the production or decrease the production, because it remains same. Like rent. Suppose rent is rupees 100 per annum and you have manufacture 0 units. Even though you will have to pay rupees 100 as a rent. If you have manufacture single unit, then also total cost will be 100. You have manufacture 2 units, then rent amount will remain same, that is 100. If you increase the number of units 20 units, minimum or maximum, the rent to be paid or total fixed cost remains same. You can see 100 at all levels, minimum to maximum capacity. You have to pay rupees 100 fixed cost. It doesn't change. You have decreased the production or you have increased the production, your total fixed costs remain same. It will not increase if you increase the production. It will not decrease if you decrease the production. You can see you have increased the production but your fixed costs remain same. You have decreased, same. Increase even though it is same. That's why such cost known as fixed cost. Total fixed cost always remain fixed. That's why always remain same. That's why total fixed cost is called as fixed. It remains fixed. It doesn't change. It doesn't changes. It doesn't increases or decreases. Whether you increase the production or decrease the production, total fixed cost will not change. It will remain fixed. But what about per unit fixed cost? Per unit fixed cost. Total fixed costs get distributed or divided among number of units. That's why if you increase the number of units, then your per unit fixed cost get decreases. You can see here. We have manufactured 1 unit, then per unit fixed cost 100 and total is also 100. We have manufactured 2 units. Then what happened? Total 100 rupees fixed cost get divided into 2 units. 100 divided by 2. Total fixed cost 100 divided by 2 number of units is equal to 50 will be per unit fixed cost. Next, you have increased more. 4 units you have manufactured. Total fixed cost remains same, 100 divided by number of units 4. 100 divided by 4, 25 will be the per unit fixed cost. If you have increased more up to 100, you have manufactured 100 units up to the highest capacity, then total fixed cost remains same, 100. Total fixed cost 100 divided by number of units 100. 100 divided by 100, rupee 1 will be per unit fixed cost. We can understand, if we are increasing number of units, our per unit fixed cost get decreasing. Per unit fixed cost is decreasing. If we are increasing production, our per unit fixed cost get decreasing. If we decrease number of units production, if we decrease production, then our per unit fixed cost get increases. Means it has opposite relation with the volume of production. Per unit fixed cost has opposite relation with the volume of production. Per unit fixed cost has opposite relation with volume of production. You can see, if we increase the production, per unit fixed cost get decreases. If we decrease the volume of production, our per unit fixed cost get increases. Why it happens? Because total fixed cost get divided among number of units. If number of units are more, then per unit amount will be less. You can see, if 1 unit we have manufactured, per unit 100. If 2, then 50. If 4, then 25. If 100, then 1. Then 1. We can see, if we increase production, then per unit fixed cost get decreases. And if we decrease the production, then per unit fixed cost increases. Means per unit fixed cost has opposite relation. If we increase production, then per unit fixed cost get decreases. If we decrease the production, then per unit fixed cost increases. So what we have discussed? The nature of variability of total fixed cost and per unit fixed cost we have discussed. So total fixed cost doesn't changes. It remains same. It is fixed. It remains constant. That's why non-variable. It doesn't vary. That's why it is called as fixed cost. So total fixed cost remains same. It doesn't changes. So total fixed cost has no relation with the production, volume of production. It is neutral. It will not increase or decrease, whether you increase the production or decrease the production. But if you want to increase your production more than the capacity, your capacity is up to 100 units. So up to 100 units, your total fixed cost will be 100. But if you want to manufacture more 100, again 100, 200 you have to manufacture, then your total fixed cost 100 will get double. Then 200 will be your total fixed cost. Means up to certain level, up to your capacity, your total fixed cost will remain same. But if you cross that maximum capacity limit, then new infrastructure you need and new infrastructural cost will get added in the total fixed cost. Okay, means total fixed costs are those costs which remain same up to a certain level of activity, means up to the maximum capacity. So what we have discussed? The nature of variability of fixed cost. Fixed cost has two types: total fixed cost and per unit fixed cost. Total fixed cost remains same, it doesn't change. That's why we say total fixed cost is fixed. And per unit fixed cost, total fixed cost is fixed. Its nature of variability is fixed. And per unit fixed cost, it changes. If you increase the production, cost get decreases. If you decrease the production, cost get increases. Cost increases. That's why we can say per unit fixed cost is variable in nature. Per unit fixed cost is variable in nature and total fixed cost is fixed in nature. So with the help of this example, today we have discussed what is mean by fixed cost and two types of fixed cost. Which are two types? Total fixed cost and second, per unit fixed cost. And we have also discussed the nature of variability of total fixed cost and per unit fixed cost. Total fixed cost nature of variability is fixed. It remains fixed. It will not change. But per unit fixed cost will get change. It will change. It is variable. You can see this is also fixed cost. Per unit fixed cost is also fixed cost, but it get changes. It changes. If number of units produced increases, per unit cost decreases. If volume of production decreases, per unit cost increases. It has opposite relation with the volume of production. Total fixed cost has no relation. It remains constant, whether you increase the production or decrease the production. You can see fixed cost means the costs which remain fixed irrespective of level of output are known as fixed cost. The cost which doesn't change with the change in the volume of production. Like examples of fixed cost are rent, insurance, salaries, depreciation. These are the costs which doesn't change. This cost doesn't increase or decrease, whether you increase the production or decrease the production. That's why such costs known as fixed cost. Now, two types of fixed cost. First is total fixed cost, which remains same, which doesn't change. You can see total fixed cost doesn't change, whether with the change in the volume of production. It doesn't change. Whether you increase the production or decrease the production, fixed cost does not change. It remains same. That's why it is called as fixed cost. But second type of fixed cost, per unit fixed cost. Per unit fixed cost, it changes if production increases or decreases. It changes. You can see if you have increased the production, it has changed. You have decreased the production, it has changed. If you increase the production, per unit cost get decreases. if you decrease the production, per unit cost, fixed cost increases. Means it has opposite relation with the volume of output or production. So what we have discussed, fixed cost meaning. Two types of fixed cost. Which two types? Total fixed cost and per unit fixed cost. We have discussed examples of fixed cost. Which are examples? Rent, salaries, depreciation, insurance, and etc. These are examples of fixed cost we have discussed. Then we have discussed variability, nature of variability of fixed cost, of per unit fixed cost and total fixed cost. What is nature of variability of total fixed cost? It remains fixed, it remains same, it doesn't changes with the changes in the volume of activity or volume of production. But per unit fixed cost changes, it has opposite relation with volume of production. Per unit fixed cost changes. That's why we can say total fixed cost is fixed in nature and per unit fixed cost is variable in nature. Fixed cost which doesn't change with the volume of production. Examples: salary, rent, insurance, depreciation. Nature of variability, total fixed cost fixed in nature and per unit fixed cost is variable in nature. So I hope all of you understood it. Thank you.